All right. Good afternoon, good morning, good evening, wherever you are in the world. We're grateful you're here for the January release of the Talent Market Index. My name is Jonathan Zila. Most people call me Jay-Z. I am here at Talivity, the president of Talivity, and we're gonna wrap a chapter right here to start the call. So for the just over 30 folks. Oh, there's more joining as we speak. Let's get that last Happy New Year out of you in the chat. Okay, we're going to end the Happy New Year's right here at the middle of January. That some people have said this is the longest year of my life so far, 15 days in. So give me a Happy New Year in the chat if you're with me and ready for the Talent Market Index today. This will be the last Happy New Year as there we go. Ryan from San Fran. Happy New Year. Happy New Year. Awesome. Awesome. Well, glad you are here as we've got folks pouring into the session. We're excited to kick off the year thinking about data. We're a little bit nerdy over here on the Talivity side, and I mean that in the best way possible. But we want to help you start off the year with an incredible look at what we're seeing in the data to give you the best information at your fingertips. Firstly, let me introduce you to Talivity. We are a tech-enabled consulting partner, really data at the center of everything we do as we start to help our customers, talent acquisition and HR leaders, uncover employer brand reputation challenges, tracking workforce and trends, really digging into that world of talent intelligence, and really helping you put AI to work in the ways that are going to drive your recruitment talent function forward. We're excited to launch, went out yesterday, our 2026 TA Trend Survey that is now live. For those of you that don't have that in your email, you're going to get that following the session today with a recording of the session. So, if you hear anything super good, you can go back and snag some of those sound bites. We would love for you to take a moment to fill out this trend survey. This is going to really drive forward our industry. And although we've got a vested interest in helping you do that in the ways that we can, we want to push the industry forward more broadly. And using this data is going to really help us get to a great place to make sure we can continue to make innovative decisions inside talent acquisition. So be on the lookout for that, and we are grateful for your input there. Awesome. Well, without further ado, we're going to get right into Mona bringing the heat. I think I now say every time on this call, but Mona, come on to the stage and bring us the Talent Market Index January 26 release.
Thank you, Jay-Z. Happy New Year, everyone. Thank you for joining us. We are excited to dig into the trends today. There's a lot of good storylines coming out of the data, but before we do that, if you're new here, I'm going to take a minute to set the stage as I always do. If you've heard this before, apologies, but I want to make sure that we level set in terms of what the Talent Market Index is and what we track. So we got the BLS jobs report last Friday on the 9th. We get the ADP reports that track the private sector. We get JOLTS that track labor turnover. And they don't answer one key question. What does it actually costs to attract talent right now when you look at the supply and demand of certain roles and sectors? So that's where the Talent Market Index comes in. It measures where employers are spending on paid job ads. We track 9 key segments, and it gives you a real-time view of hiring demand and cost pressure. So when you layer that on top of the traditional data sets that we get on a monthly basis, we feel you get a much fuller picture. So not just who's hiring, but how hard and expensive it is for you to compete for talent. So we're here to help. Before we get into the January data, we're going to bring some of the key headlines up front for you so that we can set the table a little bit. But before we do that, did you know that 12 cities in the US recorded their hottest December on record in 2025? Fun fact for you all, I went to school to be a news reporter, so I just brought back my old childhood dreams here. But I have a point here. The labor market is still in deep freeze, and 2025 ended as one of the weakest years of job growth since 2020. That stuck vibe you might be hearing about, it is truly real. So in December, the US labor market added about 50,000 jobs. That's decent. Unemployment ticked down slightly to 4.4%. Good sign. But here's what's kind of interesting. The leading sectors that we saw gains in were number one, food services at 27,000, and number two, healthcare at 21,000. Now, I want to remind you, so if you've been following us for a while, healthcare was kind of the one industry story that we were talking about all year last year. They were consistently adding jobs month over month, carrying the labor market. But this is the first time in a long time that we're seeing another sector actually lead in job gains in food services. So that's a really interesting story. We're going to talk about it a little bit more later. And let's talk about retail. So retail lost 25,000 jobs in the middle of peak season. Were shoppers timid or were they spending elsewhere? We're going to talk about that a little bit later as well. But the 2025 slowdown is undeniable. So for the full year, we saw that employers added just over 500,000, so 584,000 jobs in the year. That's compared to, for context, in 2024, 2 million jobs. So massive step down that we're seeing. And that's why TA teams are seeing fewer openings, slower approvals, less candidate movement across the board. All right, but what are we seeing on the TMI? Headline here is pricing is easing, but it's not evenly easing. So what we saw month over month was, cooling across almost every segment, all but two. And we're going to talk about that later. But if you zoom out year over year, the costs are still elevated and uneven. So yes, a bit of relief, which is welcome. It's not universal, and I'm not calling it a full reset. So the bottom line is market is still frozen. Growth is cautious, and costs are starting to rebalance. So with it, let's talk about January and what we saw in the data. Welcome to the January 2026 Talent Market Index release. The bigger signal from the BLS wasn't just slow job growth. It was how concentrated job growth has become. So, as I mentioned, we saw growth in food services, healthcare, and retail lost jobs. But the TMI isn't moving together. We're seeing that it's splintering. So let's start with finance and operations. This was a big story for us last year. We saw prices really, really come up for a good part of the year. We're seeing those prices come down month over month, which is great. But look at the year over year change. It's still up pretty significantly. So cost pressure definitely isn't gone here. Healthcare, cooling slightly month over month, still elevated year over year. Demand remains resilient here, and the competition is still real. Let's talk about IT and related. This is one of the few areas where we're seeing some cooling down month over month, year over year. Still choppy, still cautious. I heard someone say the other day, if you're in healthcare or in AI, the labor market is awesome for you right now. So that's what we're seeing start to come through in IT and related. Sales was another interesting one, slight easing, again, month over month. Year over year increase is still meaningful. So, companies may have pulled back a bit at the end of the year, not surprising and not uncommon for this time of the year, but they're still investing in roles tied to revenue and growth. And we saw that trend start to peak at the end of last year. Okay, let's talk about retail. As I promised, this is where the headlines and reality disconnect. Again, I'll remind you, 25,000 jobs lost in December, and the hardest hit subcategories were general merchandise retailers. So those are your warehouse clubs, your Costco's, your super centers. They lost about 19,000 jobs in December. So you might be asking yourself, why are prices up so much month over month in our index? Well, job losses don't automatically mean that hiring gets less expensive. Retail can be net down on headcount with employers still facing pressure on roles that matter most. So high turnover frontline roles, highly competitive local markets. This is where the supply and demand of the market information is really, really critical because the broad strokes trends are not really going to be your reality when you look at markets that have higher demand and fewer supply. All right, transportation and logistics. you're going to notice this one is jumping off the page. We're going to double click on this one in a moment, because when I looked at the data, this was my biggest wait, what? Signals in the data this month. Food services, we talked about this one, but I want to talk about it a little bit more. Food services added 27,000 jobs, as I mentioned before, in December. For perspective, so we talked about a huge drop in overall job gains from 2024 to 2025. This sector is actually slightly up on average month over month. So 2025, on average, this sector added 12,000 jobs. 2024, on average, added 11,000 jobs. This is sustained demand. Okay, so food services is actually doing quite well when you look at the labor market. And I know that Jay-Z and Adam are going to talk a bit more about this later, because we are really interested to hear from Adam what he's seeing with his client base here. So let's zoom out for a minute. Key takeaway, some segments are thawing, others are tightening, and the spread between is widening. So as promised, let's take a closer look at transportation and logistics. This is the clearest example of a month where market demand didn't just stay high, it got more expensive to keep up. We're seeing prices at an all-time high here, up 126% month over month, 111% up year over year. And the why really comes down to three forces hitting at the same time. First, holiday e-commerce spending hit a record of $257 billion. Over the past couple of years that we've done this, we've seen this kind of edge up of e-commerce and down of in-person brick and mortar retail spending. This year, e-commerce hit another record. I'm going to expect to see that go up every single year from here on out. So fulfillment and last mile delivery demand stayed elevated through December. Second, capacity. So truckload capacity tightened late in the month. Not surprising, right? These are the late shoppers, those that are trying to get those last minute holiday purchases in. Spot rates jumped about 19%, and tender rejections peaked about 13%. So translation here is when freight moves get harder to cover, everything becomes more urgent and the costs go up fast, which is what we're seeing here. Third, the labor market is tight. Transportation unemployment dropped to 3.6% in December. That's down from 4.3% at the same time last year. As a reminder, on average, the unemployment rate is 4.4%. So even if you're not hiring more people, you're competing harder for the same workers. And that's exactly how talent attraction prices get pushed higher in a month like December. So demand stayed strong, capacity got constrained, and the labor pool got smaller. All a recipe for it was more expensive to acquire talent in December. All right, with that, you've heard my take, but I'm sure you want to hear a few others. So lucky for you, we've got Jay-Z and Adam coming back onto the stage to talk a bit more about the TMI data and what's happening in the labor market. So Jay-Z and Adam, welcome back.
Awesome. Thank you, Mona. Well, the oracle of talent acquisition. Now, I don't want to, make it too weighty here, Adam. But let's just start macro. Let's think through this, calendar year 25, slow job creation. Like, I think we can get a little frozen by that, and I don't want to be too, I'm an internal optimist, but like, how should we think about this generally so that we're not, stuck to say, well, I guess there's no jobs. I guess we don't need to be aggressive in particular. Like, how should we think about this?
Yeah, well, Jay-Z, I think that's the right question to be asking. I think when we look back at 2025, what really stands out to me is we have to be careful with our language first. 2025 was a year of slowing job growth, right? And so, yes, we averaged significantly fewer non-farm jobs month in and month out over the course of the year, and they got very concentrated. Now, the good news is that it was still a year of job growth and not net job losses. We'd be having a very different conversation about the entire economy. When you look at the macro signals right now, the economy's humming along. Asset prices remain high. Inflation remains relatively low. And the economy, by and large, looks pretty good. What we're seeing, though, is across, in particular, our customer base, where hiring activity is continuing and where it's accelerating and decelerating is concentrated in specific occupations. And so when we look at what Monica commented on, we think about food services being a sort of steady dark horse throughout the year and adding jobs. Food services, a couple of interesting factors here. In that industry, voluntary quits are more than twice the national average. And what that means is that there's more movement and more hiring in food services. So while food services are adding jobs and quit rates remain elevated, that means that there's more pricing pressure in the talent markets when you want to attract somebody to come and apply to work for your restaurant. There are a lot of theories about what's driving the continued spend in food and beverage in terms of those, like I mentioned, those elevated asset prices, and in particular, communities that are enjoying that feeling of wealth, even if it's only on paper. But fundamentally, what we see is that the quick serve restaurants that we do a lot of business with not only are continuing to hire, but are hiring aggressively, because what they don't want to do is they don't want to miss out on the revenue that they have at their fingertips in their locations because of a lack of talent. And when we think about what that means, and this is thematically what we see across the board, is that businesses where labor drives revenue, and especially if it's related to a square footage, a brick and mortar presence, those businesses are continuing to hire. They're continuing to hire aggressively, and they're continuing to spend to hire, so that because that connection between revenue and the pressure that those businesses are under to produce results, even in an economy while it's doing okay, is not going gangbusters. Talent acquisition leaders know that the last place they want to be is at the short end of the stick when the board says, why did we miss our targets? So food services, very, very interesting. Healthcare, we talk about healthcare, I think, month in and month out. We're going to keep talking about healthcare, and it's very, very simple. We have a supply and demand problem that is systemic in the U.S. The domestic health system, healthcare workers, and healthcare education is not keeping up with producing the talent that is required to serve the demands of our aging population. Even just here in New York this week, there's a big nurses strike. And what that meant is that we had a lot of travel nurses being pulled from other regions with big paychecks on short-term contract contingent work, which, guess what, puts a lot of pressure on those other areas. And so we continue to see elevated prices. We continue to see growth. And, I don't think that that's going to change anytime soon, in particular because clinical roles require training and credentialing, and specific credentialing in many cases that are market driven.
Yeah, I think it's the interesting part of talent acquisition that you hit on the retail side, is that this switching at a faster rate than average sort of produces the positive results we want to see in the people side of the economy, right? They're not switching because they're making less money. They're switching because they're making more money.
That's right.
That feeds, in the system. Now flip to the other side where switching is still really low. We've got folks on the call that, across I can just see fill recs across every category Mona walked through. Most of those are very slow switching. So it's hard to pull in the talent out of their current job that they need. How do you think about this when you're advising your customers? Are we just like, well, we got to pull out all the roadblocks so conversion is easy? We've got to just tell a better story, some combination of those. Like, is there something we're not thinking about to operate in this environment?
Yeah, so that's a good question. When we think about the sit down jobs at the knowledge workers and primarily professional workers, where turnover is really at all time lows. When we think about that and we compare it to the Great Resignation of just a few years ago, it's basically a full 180. What we're seeing is that, in particular for our clients that are highly reliant on job boards, they're seeing prices go up significantly. And where we're seeing selective and, quite frankly, very effective strategies come into play is when we start to reach out to talent audiences that are not on pre-selected active job seeker platforms. And so that's a lot of words to say when people aren't actively looking, right? they may still be available. They're still part of the audience that we're trying to pull in and attract to our clients' open roles. But we got to go where the talent is. And so what we're seeing is that the actual participation in the active job seeker communities, the big job boards, participation is declining. We see that as a result of a couple of different factors. There is that reluctance to move. And if you're reluctant to move, that also means you're not going to waste your time looking, right? So the sizes of those audiences are tightening. What's also happening is that in those segments of the job board provider market, where those job boards rely heavily on SEO to generate job seeker traffic, job seeker behaviors are changing as everyone's behavior is shifting with the advent of AI search and generative search results that are providing answers that are citable versus links to content. And so we've got a couple of different pressures there that are creating a limiting factor within job boards, which is driving up the price of attraction on job boards. And where we're seeing a lot of success now is going outside of the job board ecosystem to what we would traditionally call a passive channel. These can be social or social search being more active, social being more passive traditionally. Those concepts of passive versus active are getting a little bit dated. And so when we really think about marketing today, right, the marketing for talent, you may have talent that is actively interested but not actively looking because they're reluctant to switch. Those folks, you can hit with a message just once or twice on a social network where they're already spending hours and hours each day, and you can convert that talent through to apply. One of the other really, really interesting things that we're seeing in this, this is anecdotal evidence, but we've seen with a few examples now where we've had visibility in tracking post-hire outcomes, that candidates that come from what are traditionally thought of as passive channels stay on the job longer. And so when we think about, again, as a talent marketer or recruiter, getting the message out in front of the audience where you know the talent's there. They may not be actively looking, they may be apprehensive to look. They may be really interested in moving with the right message. Now, those are the folks that are also less prone to go looking after they've joined your company.
Yep. It's interesting. This is where the world gets weird when, as you talk about, employer brand, then you start having a conversation with ChatGPT or Claude or Gemini. And now we've crossed into some realm of recruitment, marketing, employer brand, all in one.
Mm-hmm.
Right. And so, little fun exercise for anybody who's, curious, go to Claude, go to Gemini, go to ChatGPT, and just ask about a job in your company that is open. Maybe ask about that city if it's a hybrid or in-person job, and just ask a question about the job and see what you get. This is where we're starting to see some really interesting trends because remember, ChatGPT is a little biased towards making you happy, at least in my experience. So it's going to try and make everything feel great, but it's going to give you a lot more information than just a list of links. And so that's where you start to have this just a much different experience than if Adam, you were to say, well, what are the CEO jobs in New York City, right? It's like this is a real a different experience. So it starts to get really interesting, and worlds collide here between jobs and employer brand, which is interesting.
Yeah. That's exactly right. And I think what the unfortunate reality is that most of our audience today on this webinar who go and search for jobs or their open jobs, most of their content from their career site is not going to show up in that search result. And that search result, by the way, is going to be somewhat opinionated and may say things that we don't like to read about our companies or jobs, right? Especially when professionals in our space are working tirelessly to promote an authentic employer brand and really ensure that the impression that talent audiences are getting is accurate and authentic and positive. So what we see is we see there's a ton of opportunity in that space. There's some very interesting technologies in the consumer space now. What we're seeing is that consumer brands are learning quickly, and consumer marketing companies are multiplying as they typically do in these instances. very quickly, where new technologies that form either data lakes or mirrors of existing websites that are more accessible to an LLM to find and cite content, and it's marked up content that is points an LLM exactly where it needs to go to produce an answer. That visibility is becoming something that it's not commoditized yet, but it is something that there are multiple tech providers providing solutions for. So the nice thing is that in the recruitment marketing space, I expect we're going to see the same thing. We're looking, we're evaluating a number of partners in the space right now. Because fundamentally, what we do at Recruitics is connect our clients to talent audiences all over the world.
Awesome. All right. Well, I'm going to hit the question here in the chat from Shauna. Are there any leading indicators on how, when, if search or AI platforms are planning on monetizing their search results? We've been holding our breath, and I'm about out of breath. Adam, what do we think?
Well, I mean, I think the leading indicators, the leaks. I'll tell you, fundamentally, I don't see any path forward where these providers don't have ad units. Now, what those ad units look like, there's been a lot of speculation around it. We were involved in some early pilots with Perplexity, so it was about a year ago now. But I'll say for everyone on the call, at the time, search volume on that engine was about 20% career related. And so they were very interested in figuring out how can we harness this all of this interest and intent and activity, and how can we monetize it? Now, the ad units that they were working through at the time, and that I think is a good sort of view forward into what things may look like. What was really interesting is those ad units were not ad units that you could control as a sponsoring brand. So when you think about that, the history of advertising has always been a publisher has some kind of medium for you to fill with content, video, imagery, text, whatever. Ad units in this case are becoming content that you can sponsor, that can raise visibility, but it's not content that you can provide. And so what's really interesting here is that the AI search providers are trying to figure out, how do we evolve advertising ad units in a world where we're providing answers and not links to other stuff? Because fundamentally, they still want the user experience to be one where somebody gets the answer they're looking for, and they want to sell the opportunity to raise visibility or raise relevancy, right, in an ad unit, but without sacrificing, what they see as the sort of pure intent of the medium.
Yeah, I think this is, we're doing a lot of exploration on the Talivity side. How do we, start to, structure content and partner with some of our clients there? I mean, yeah, this is just operates entirely differently. And so I think that's where this, it's harder to control the narrative. And so that's why when you start thinking through what messages we want to tell, for anyone who thinks about employer brand as much as we do, as you're thinking through the stories many of you have embedded in your, organizations, how do you tell those in a very thorough way that gives you all these bits of content that, can be at the forefront of these, AI, kind of AI conversations. It's a fascinating shift. Adam, maybe the last question here that I'm sort of thinking of as we, and I've hit a version of this, but I want to, get us into the new year. All right. We're looking at some, freeze and slow and job growth, but small job growth. Some of these things can make us a little bit tighter fisted as we explore a new system, as we, deploy a new campaign and, put some real budget behind it, as we bring on board a new tech provider. I don't know, what's your, how should we be thinking about not, going completely risk averse, but leaning in a bit and going, okay, let's not get too far behind what we hope. And I'm Mr. Positive here. What we hope is going to be a great economic year to come and hopefully following.
Well, I'll tell you what we're seeing, and I'll be blunt here. The playbook that worked for many, many years with programmatic job advertising on job boards, driving almost complete or complete fulfillment for many employers at an efficient cost, that playbook is breaking. And so, this is just the reality that we're in. We're investing heavily in opening up those audiences, in particular with different generational shifts happening. We talk a lot about AI search and generative search, but fundamentally for Gen Z in particular, information seeking and action taking has shifted, and it's shifted in ways that can be a little bit hard to sense if you're an older millennial like you and I, JC. And so, what we're seeing today is that, in particular, the generation that's entering the workforce, uh, their job search is starting on social media, and then it's actually a social activity as well, which is another thing that is just a little bit mind bending when you think
Weird.
when you think about our experience early in our
Yeah.
careers. We would go into the corporate office and ask to see jobs, and we would write out our application and talk about a one person experience. The search is becoming social, where the information comes from is becoming social. The actual engagement is also becoming less straightforward. And so we have candidates where, what we're seeing is that, just like in consumer marketing, the number of touch points it takes to build intent, especially if your employer brand is not that strong or your consumer brand is non-existent, it's much, much more difficult to get somebody to the point where they're excited to give you their information, at least in a long form job application format. So there's all a long-winded way of saying today what we are seeing is that if you lean back, tighten things up, and say, we're just going to do what we did last year, it's actually going to give you the least probability of success this year, because talent behaviors have shifted. So those audiences have shifted, the behaviors have shifted, and if you're not adapting to those audiences, you are not going to get the job done. And for most of the clients that we support, they're also under immense pressure to get the job done more efficiently. And I don't mean just in their media budgets, but I also mean in their TA teams. And so they're under pressure to find ways to increase rec loads and do it effectively, where quality talent is still flowing through to the organization, to the roles that are driving revenue and growth in the company, but it's happening at a lower total cost of talent. And so to get that done, you have to go into new channels. You have to provide new ways for candidates to express interest. You have to engage those candidates in different ways, and you can do that and put AI to work and do it with a lot of automation that cuts down on your total cost. So, I look at this here, and I think the companies that are going to be very successful are the ones who see this squeeze and who respond with innovation and creativity.
Yeah, by the way, those are the best trophies to take to the boardroom, executive leadership meeting for, when you say, look, we did this at a lower cost. We tried a new channel. Here's what we saw. Those are the victories that tell an incredible story. Last year I was at Unleash and I heard, Josh, what's Josh's last name? Burson. Thank you. Josh Burson talked me off the ledge on AGI, Adam. Okay. And I was already sort of toiling, but I started really leaning in to how do we get curious about these solutions and pilot and try things we haven't done before. And I think that's how I'd, put the icing on what you just said is be curious, go deep on the problem space inside your own funnel, because you don't all have the same challenges on the call today, but there are some real clear problems that I think if you get really close to and you get curious about, there's some incredible opportunities to bring home some real trophies as we kind of navigate this new world of talent acquisition. So, all right, awesome, Adam. Thank you. That was great. Great intelligence, context, really advice and perspective. Excited to be with you again today. For those of you that join us on a recurring basis, we're so grateful that you're here again, and we would love to spend some time with you, either myself, Mona, Graham on our team here at Talivity. You can reach out to us, JZ at Talivity, Mona at Talivity, Graham T at Talivity as well. to really talk through some of the ways that we can support you. We'd love to just do a quick 30-minute strategy session at no cost. Lastly, just to re-mention in your follow-up email, you're going to get the recording, also going to get our TA trend survey, and we want to dig into which channels are delivering ROI, in all the solutions that are out there in the, HR world of HR tech. How are you navigating that? What's employer brand look like in your organization? How are you prepping for generative AIs? We've talked about a lot today. So those are the types of questions that we want to hear from you on, and how you're really answering those to move this conversation forward. We are your partners and really excited to be with you again today. Hope you'll join us next month, February 19th, Thursday, 1 p.m. Eastern, for the February Talent Market Index release. Grateful, Adam, for your time. Mona, thank you for bringing the heat again, and super excited to see you all again next February. Thanks, everybody. Thanks, Adam.
Thanks, Jay-Z. Thanks, Mona. Thanks, all.
Have a good start to the new year.